Amir, I've got to ask you, as a mining chairman and CEO, it's the biggest fear amongst investors, and it probably doesn't get talked about enough with experts like such people such as yourself as David. But nationalization, with what just took place in Cyprus, people just aren't sure what's next. Even first world countries are seeing radical government actions in the face of the Western debt crisis. This is great for gold, but how about the mining companies? As the chairman of Brazil Resources, who has projects in South America, what can you tell investors about the governments you are dealing with, and if there is anything a company can do to avoid becoming a target of their local government?
Yeah, this is a big part of developing any mining project, and balancing the political risks versus permitting risks and project. I mean, this is sort of um, the magic mix that any successful company needs to effectively balance. So when you look at, let's say, uranium energy, Daniel, clearly the company's initial focus was in the United States. But we took the view that even in the U.S., we need to look at it on a state-by-state basis, and that every state, basically, in a way, it's its own jurisdiction and country, and that developing a uranium project in California would be very different than developing a uranium project in Texas. Mm-hmm. And, on top of that, what I felt was always important was not necessarily to have experts or technical experts that have decades of uranium experience, but that we wanted experts and people that had significant experience in those exact jurisdictions that we wanted to develop a mine in. Like I realized that a uranium geologist or engineer that had worked a whole lot in Arizona, frankly, didn't know a whole lot about Texas, and that's all in the U.S.
Yeah.
And so, ultimately, we focused on making sure we were in a jurisdiction, a state that was business friendly and understood and had a process, and that as long as you followed the process, you can make progress. And assembled a team of people that were from Texas, had developed and permitted mines in Texas, and that understood the regulatory framework, and that their experience was a perfect match for what the objectives of the company was going to be. And and that's why when you look at UEC went from concept to production in 5 years. And that's fast in the junior resource business to make a transition that fast. But I think it's because we didn't just have really good people. We had people with relevant experience to what our objective was. When you look at Brazil, South America is a big place. South America has obviously had it's been in the news in a negative light when you look at some of the issues that came up politically around Argentina and in Bolivia, for example. But I just look at the fact that, in any country, anywhere you go, it always starts with your strategic local partners and your partners on the ground. We were very fortunate with Brazil Resources from day one to have garnered the attention and been able to establish a partnership with Brazil Invest, which is the oldest merchant bank in Brazil. There have been really that local partner and sponsor that has given the company a local face and the ability to execute and get things done down there. And they're not just a partner, they're equity holders. Brazil Invest owns 12% of our company. The chairman of that bank sits on our board of directors. I don't know of too many other junior resource companies that have a bank in the country that they're operating in involved as a partner and a shareholder. So that has definitely helped tremendously with helping us navigate the political framework down there. But also, when you look at Brazil, when you look at a country that today probably has one of the highest numbers of mining foreign investment coming into its sector, into its mining sector, some of the highest dollar amounts in M&A transaction in mining are in Brazil. Outside of mining, they have a diversified economy. They're hosting the next World Cup of soccer. They're hosting the next Summer Olympics. This is a country that's opening itself up to the world and showing that it's truly open for business, not just the business of mining, but definitely becoming a leading country in the world. And I think these are the types of jurisdictions you want to be in, where the people and the policymakers and politicians have respect for rule of law, that rule of law exists, that modern mining framework exists that you can work with. But all of that also isn't enough. You need all of that plus the right local partners. And the right local partners that not just are there collecting a fee to be a partner, but have skin in the game, just like myself, just like you, just like David, who's a shareholder, where, we wake up every day worrying about our share price and our equity value. We want the local partners to basically be fully aligned with you. So I think it's about sort of just making sure how these things are structured and are in place. Again, the combination of having the team with the relevant experience, having the right local partners in these countries, and then on top of that, obviously picking countries where you see the right framework, the right attitude, the right political environment developing. And that's why I'm excited about Brazil. That's why I'm excited about Texas. And that's why we focused the core business of UEC and Brazil Resources in these jurisdictions.
David and Amir, both of you guys want to ask you the same question in closing. Let's start with David. David, ultimately over the next 10 years, how does this all play out for those holding precious metals and precious metals investments like mining stocks?
Great question. I wish I had an absolute answer. I'll give you my opinion because that's really all it is. Depends how the debt-based monetary system unfolds from here on out. If gold is reinstituted as a part or all of a new financial system, then obviously those that own gold will probably benefit because on the debt structure that's currently existing, gold would have to be repriced at a level much higher than it is right now for the market to clear. In other words, for any gold backing, even a partial gold backing, and writing down a lot of the debt that's out there that will never be paid back, even if you did that, still would forecast a much higher gold price in dollar terms or yen terms or any other currency. However, that's not guaranteed. There is no guarantee that we're going to go back to any type of gold standard or gold backing standard. I believe it will happen, but again, that's an opinion. It's not a fact. Silver is a little bit different story. Silver is both a monetary metal and an industrial metal, and as we come out of this conundrum, and we will at some point, silver's use in a high-tech environment is unquestioned and will continue, but certainly could slump depending on what happens over the next decade, which I would forecast will be very uncertain. As far as the resource sector goes, I really think that's a good place to be if you can find the right companies, because a lot of these companies are in a growth profile. And, one of the adages that a lot of Americans have and other people, but it seems particularly true in North America, the Americans and the Canadians, geez, I really wish I owned my own business. And, that's what the equity market's all about. I mean, I can be in the uranium business by owning Uranium Energy Corporation. And when I buy a business, that's how I look at it. Warren Buffett's made these statements as well. I'm not that fond of Buffett for reasons I won't go into, but nonetheless, the idea is that you have the ability to own a business by buying into the business. Now, if you're going to buy a business, aren't you going to buy a profitable business? I mean, this is something that is so basic to the average person, yet it's overlooked by the majority of investors. I've been in the investment business and investing since I was a 16-year-old kid. That was quite some time ago. And it astounds me that people will buy something on some story or something they read on the internet or something off a chat room or something they overheard at lunch, or their friend that's never invested a dime tells them about this great deal. I mean, it's unbelievable to me that people don't want to do their research, too, and if they can't take the time to do it, at least find somebody that does research and does, do a lot of that digging into the investment classes that they're interested in and find it that way. But they don't. They will buy stuff that I wouldn't touch. Doesn't mean that everything that I do is right. Doesn't mean everything that we suggest makes a profit. But that's the idea. So if you had the ability to buy in the mining sector, and basically if you take a gold company or a silver company, we'll keep it very simple, those are fungible assets. An ounce of gold is an ounce of gold no matter where it's mined, no matter where it comes from. At the end of the day, when it's smelted down, it came from XYZ mining in Bolivia. It's the same as XYZ mining in Canada. It's an ounce of gold. So what you need to find out is what is the margin, what's the profit of those two companies, and which one is making the best overall use of their asset. And that's how you invest in a gold stock. So I'm probably belaboring the point, but what I want to say is that those companies, I'm not saying just gold companies, but resource companies that have a good growth profile for an asset that's needed, and that silver is actually needed more than gold is for industrial purposes. Uranium is needed for energy. When you find those kind of companies, I think you're going to do quite well by owning those, especially if they're diversified. And that's what I'll say. I think that you have to own the physical for lots of reasons, but I also think you're missing the boat if you don't get involved in the equity side. But when you do, please use common sense. Find companies that have either are making a profit or stand a darn good chance of making a profit in the future. To buy something because it's got a great story is not investing. That's speculating.
It's great advice, David. Most people, I think, they spend more time on deciding where they're going to go for dinner and a movie than the stocks. Especially when junior stocks, they just kind of spread it all around instead of actually putting some work into it and partnering with the actual business. Amir, I'd like to ask you the same question. Ultimately, over the next 10 years, where do you see the price of gold? Where do you see what do you see for gold investors over the next 10 years, and why?
Daniel, I'm trying to get through the next 12 months. You're asking me about the next 10 years? Clearly, for me as an entrepreneur, I do have that kind of time horizon. I mean, I've been working on Uranium Energy Corp now for 8 years. We started Brazil Resources, I want to say about 2.5, 3 years ago. And what excites me the most about the long term, if we want to look 5-10 years out, is that the supply-demand fundamentals, which is the only thing that I can try to use as a long-term guide of how things are going to go, are really on the side of higher natural resource prices and commodities. When you look at the population trends in the world, when you look at the sovereign debt issues in the world, when you look at the urbanization themes of emerging markets, these themes are very long-term trends. These are not going away. The amount of money, as I mentioned, that is being spent on exploring for commodities, particularly gold, is rising every year, and they're finding less and less of the hard asset. And so this really does demonstrate that you've got a widening gap on a longer-term basis in terms of rising demand and supply having a tougher time to catch up. It will catch up with only higher prices because economics are what really determine the long-term supply-demand. And so I think it's very exciting to be in a position where you could be acquiring resources and ounces and pounds in the ground right now because of the short-term issues in the market. Things are really on sale. It's exciting if you can buy them at these ridiculously low valuations and be able to develop them, de-risk them, add value over a longer-term horizon, and make a lot of money for your shareholders. As David pointed out, these are businesses at the end of the day, and we're developing assets because at some point we do believe we can turn them into profitable operations. And it's always great when you can buy your future growth at a discounted price today. And that's the opportunity that we have as companies. That's what I'm focused on. And I think supply-demand fundamentals in the next 5-10 years definitely favor higher prices for commodities, and this is definitely an exciting cycle to be in right now.
Amir Adnani of Uranium Energy Corp and Brazil Resources, and David Morgan of Silver-Investor. Thank you so much for joining me today, gentlemen.